All right, welcome. Now, today, the strategy I will be sharing with us today, it's just a common analysis base, but if you actually follow it, you're going to make tremendous amounts of money. Tremendous. Now, I will also be helping out to actually, apart from the analysis, I will be adding a particular indicator for you to actually know if it is safe with your analysis to make entry or not. Okay, let's quickly dive into it. Okay, like you can see, I took this trade and it's the analysis I just used to take the trade, and it's playing out. It's just a simple resistance support in the store. Now let me quickly explain the way I did it. I did not even use any indicator, but I will explain. Now if you don't understand, I will now add indicator so that indicator can actually help you out. Now I will be taking the profit any moment from now because it is getting to a zone. It has even gotten there that I expect the market to get to, and that is this. It's just like market repeating history, getting to a place where it has gotten to before and actually making a move. This market can continue upward and can also pull back. So it's not important that you actually take all the profit. Okay, you must understand that it's not important that you take all the profit in the market. What is very key, what is important, is for you to actually make right decision, make profit, and exit that market. Okay, now why did I make this buy entry? Now the normal thing is to actually look at the market and pick the resistance and pick the support. Now I'm going to be using an higher time frame, or just turn my phone diagonal for us to easily spot what I'm actually saying. Now naturally in the market cycle, you have market evolving from resistance, moving from resistance to support. Now when the market gets to support or gets to resistance, there will always be a reaction of the market. Okay, now they've explained to you that fix 75 respond to trend, but much more than trend is actually the resistance and the support. If you don't understand the resistance and support concept, if you even use trend, you will actually enter wrong and make some wrong entries and still have some losses, because resistance and support, you will still have to pay attention to them. Now I'm going to actually mark the zones that are important, and as it is so obvious, they are the levels that you already also know. Sorry, I did not mean to move it to 15 minutes. You can analyze on 15 minutes, you can analyze on 1 hour. Now the reason why I'm analyzing based on 1 hour is just for the purpose of this particular phone limitation, that I can actually go beyond. And now I'm able to rule this line, because if you go back in history, that line also was respected, though it's not here, and this is why this is it here. Now you can see now the line I ruled is respected here. So if you go back in history, the line, that area is respected. Now how did I know that area is respected? Is because of what was happening here. When the market got there, the first candle that was selling, that got there, retraced back, pull back, the buying candle occurs, and the next thing you see is that the market also failed. Okay, then eventually the next sell fails again. Now when the next sell fails again, if I go to lower time frame, which I took my entry from, and that was 5 minutes, I realized what was happening, that already the market already retest the region, and there is already a sign with buying trying to take control now, but eventually successfully the buyer shows in control here. Now you will not see it on higher time frame as 1 hour here, that this was an opportunity. Now the moment you are able to spot that the buyers are in control, you can see now buying pressure is increased, then you wait for the market to pull back. Then when the market pull back, you make your entry. Now by making that entry, your stop loss will be very tight. You will be able to set your stop loss below here and actually ride with that type of market. Now it's so simple that nobody wants to even say it's easy. So you just rule those lines. Like I promise you, you can see the market got here, which is the point where I exited the market. Now I'm not saying the market will not go beyond, but it is the reaction of the market to that area that will make me to know whether to buy or to sell. Now when the market reacted at this point by showing a buying pressure, now remember that the market was selling before, showing a selling pressure here, the market showing a failure here, then a buying pressure. But after the buying pressure, you must wait for the market to give you opportunity. My market, if it's going to go a little bit long, it's not going to just continue that way. In most cases, it will pull back. Then you will be able to make your entry. But you will not see the pullback if you are on 1 hour time frame. 1 hour time frame is just meant for you to see the week rejection, the first week rejection, probably the second week rejection. And the moment you are spotting week rejection, the first, the second, the best thing is to go to 5 minutes or 15 minutes to look out for a market that the people that are in control. Now this shows that the buyers are in control. 2 buying candle, not short on 5 minutes, long buying candle, telling you that the buyers are now in control. Then you make your entry right from here. And the moment you make your entry here, you set your stop loss here and you keep watching the market play out. Now in few cases, the market might actually hit your stop loss, but that is eventually expected in forex, that even despite the clear analysis, correct analysis, you might still lose. So you must not over trade. Don't be overconfident in the volume that you trade. Now like I said, let's return back to, let's say, 15 minutes. Now you can see the market reacting to the same level that we marked where I exited my market. Now the market giving a reaction to that zone, which is expected all the time. There will always be a reaction of the market to a key zone. Now we are spotting a failure. Now you can see a failure on 15 minutes. But yet still on 5 minutes, we have not really seen a multiple week rejection like we have here, and we have not really seen a selling pressure. So we cannot jump in and sell yet. We will expect this market to sell, and probably the next candle to sell, and the next few candles to return back to this area. Then from there, we can now make our entry. But we must already see that the sellers are in control already. If we don't spot sellers in control, there is no reason to make entry yet. Okay, so let me see another opportunity that we might actually have in the market. Let me spot if there is any other opportunity. Now let's look at this backward. Okay, this market started from here. Let's say you are able to spot the market here forming a support here, but you don't know if that support is still valid yet or is not valid. You rule the support. Let's assume you rule the support when the market was actually here, touching the air, touch it again. Now when you rule it and you are able to mark it with this area, now anybody will think that it is the best thing to enter the market here. So they will rush into the market, set their stop loss around here. Then the market, after going a little bit, if they did not take their profits, the market return back and actually stop them out. Then the market play out as they thought it would be. Because that is the same pattern that I shall show you now. Now I'm able to spot it very well because I'm on 15 minutes. You'll be able to see it very well on 15 minutes or 5 minutes. But it's good that you analyze on 1 hour, meaning that if I have to analyze, I get it here, and that, I believe, where is it now, and that is here. Okay, now you were unable to see it very well on 1 hour, but you were able to see that the market touched the next candle that was buying failed, and it wasn't the candle that was trying to sell before eventually end up being a buying candle, and meaning that the market that was selling before turn around to become a buying candle on 1 hour. You should already know who are in control of the market. Now, rushing into the market with this candle will be wrong. Why don't you wait for the market to retest that area? But you will not be able to spot it very well on 1 hour, because you will not know where exactly to make entry, and that's why you need to go to lower time frame like 5 minutes or 15 minutes. In this case, we go to 15 minutes. And that's it here. We go to 15 minutes. Now the market returned back, then you make your entry. Now, making your entry, where will you set your take profit? The first take profit, the take profit one that you are very, very certain that the market will get to, like a stepping stone for you, is the place where the market rally down from back. You know, when the market quickly rush up, the market rush down. Where that market rush to is exactly the first place where to take your first profit. Now, the next take profit will be the next level also. Now, you can see a pullback of the market here, and when the market was selling, the market pulled back upward here. Now, this level becomes a key level when we are taking our profit. Knowing fully well that market also will get there and might react when it gets there. Remember, it was a reaction of the market here. Where will be the next take profit also will be the next reaction level of the market here and here. Now, you can see that market got there, market keep moving. In this area, the market reacted to what was being a reaction at this area before. Now, just like that, fix 75 is just so simple in that same regard when you are trading it. But the issue is that most of us, we fear of missing out always make us to lose. You feel like if you don't take the trade here, you will miss out. Then eventually you took the trade, and when the market is pulling back, you could not hold the position, you close. Then eventually the market play out, and you felt, I should have held the trade. I should have held the trade. If I've held the trade, I would be in profit now. If I've held the trade. So what is my answer to that? Be patient. Always know that you cannot take all the trades in the market. There are some trades that you will miss. Okay, just settle that with your mind, with yourself. You are going to miss some trade. You're going to miss some opportunities. No matter what, if you are watching the system, you are not a robot. You're going to miss it, and it's fine. It is good. Don't also over trade. Don't overtrade. Don't rush into the market, and don't over capitalize on the market. What I mean by over capitalizing, waking up to set a target on a daily basis might be wrong. Okay. In forex, you are not another business. You are into forex. Markets can set and market might not. So if you are already calculating how much you must make today, if you don't make it, if the market is not suitable to make entries, you feel like you must make entry and you lose eventually. So I now promise that I'm going to help by giving indicator to actually help you. Now, what is the indicator that is actually good? The indicator that we should use, let's just use stochastic. Like I said, the indicator is not the major thing. Stochastic oscillator, let's use 111 and just click on done. Let the main and the signal, let them be like that. Now when you click on done, then add again to the stochastic, because the stochastic needed to be add. You're supposed to add something to the stochastic, so just add. You can add moving average, and you can also add Ichimoku. So I'll be adding moving average and I'll be adding Ichimoku, both of them. Now the Ichimoku, you can see now I'm going to make correction on the Ichimoku. Just okay, use moving average 50 exponential. Okay, now let's go to Ichimoku. Now the Ichimoku, the first two, let them have color. The last three, change the color to colorless. Okay, so now you can also see now that Ichimoku and the moving average already show an oversold rather. I've shown oversold around this region, confirming your entry to also be right. But don't forget, I did not actually capitalize on this area to make my entry. Why? I will tell you the reason. The reason why I did not capitalize to come and use here to make my entry is because if the market keeps selling, the Ichimoku and the moving average will keep going down as if they have not really, passed the 20 before. They will shift and be trying to, like a repainting. They will now be trying to get to 20 again. So you might think that the moving average have not really gotten to 20, but in the real sense, the moving average have gotten there, have passed it, and realized the market keep moving, adjusted back again. So if you capitalize on using this and think that this is the perfect thing for you to use, fine and good, you can make some money there. But don't forget, I did not use it as the primary analysis. I used the normal resistance and support, just to rule where the market is reacting. The support you have before, the resistance you have before, that the market is reacting to rule it, and also let this moving average and Ichimoku be your guide. When they cross each other, then that point you can now make your entry. But don't also forget that they cross each other right from here. So if somebody would have made the entry right early as at this place where I was actually saying that it is not best for you to make entry from, that you should wait for the reaction of the market to return back here. Now, if you have rushed in and make that entry, it will not be perfect. But eventually, the Ichimoku, the moving average later cross the red Ichimoku, now which is the second Ichimoku, which is the 21 Ichimoku. We have 921. Now, that is the one that now crossed later. But the eventual thing, what I'm trying to actually bring out is that don't use that as your primary analysis. If you do, it will be wrong, and you might actually find yourself losing some trade. Because if the market keeps dropping, you will want to cut your loss. So, but if you have actually done a resistance support and you give your analysis and you make your trade from there, you can be rest assured that the market is going to play out, because you are not only having the indicator as your guide, you are also doing what they call price action. So that's the basics of price action actually. So you're doing price action, market reacting to a zone, and you are making an entry after you have seen weak rejection. So, and you are just fine and good. So, and that's how you keep making money. You keep making money. You're able to see what I was able to just make with that particular trade. Okay, if you find this video helpful, please smash the like button, subscribe if you have not subscribed, turn on the notification bell. As I promised, I am going to be updating by this weekend the analysis, the forecast of some pairs, which is volatility 100, volatility 75, boom and crash. So stay tuned, and actually I believe you don't want to miss it out. So fine and good, and probably when we actually hit more than 1,000 subscribers and we have active viewers of more than 500, we can start a live session. Like I said in my previous video, there will not be any sense in actually running a live session when people are not available, when they are not eager to actually watch it. So I will be doing a live section then. Okay, and many people are actually asking about account management. Yes, my guys, we manage account, we do account management, but you must always understand that there is always a 25% risk on your account. And like a normal advice that we advise anybody, don't invest the money that you cannot afford to lose, in the sense that maybe the person that is trading among us has not had some few losses in the trade. Maybe at the start it might be that the first trade is lost. Nobody knows which trade will be win, which trade will be lost. It's about your analysis. So you just analysis and go in and set your stop loss. Now, if let's say the first trade is going as if it's not going to be good, and you are afraid already, and you are trying to overwhelm the person trading, the person can, emotion can take over, and the person can make more losses on your account. But as we have agreed, and now we have informed our traders and our investors, the thing that we do is that we trade volatility 75, volatility 100, boom and crash, and volatility 100 1s and 75 1s. These are the pair because of to actually minimize the risk on your account, and the maximum risk on your account is 25%. As we have always been advising everybody, Derive actually offers up to 5 synthetic accounts. If you are giving us an account, we advise you and we employ you, give us an account that is a fresh account, a new account that you have not given to somebody else, that somebody else doesn't have the login. Okay, so the link to actually sign up for account management will be below, and the profit share is 50-50. We share the profit 50-50, and the daily profit target is up to 50%, meaning that we can make up to 50% if the market is great. Probably it might be greater than that, and the investment account management starts from $100. So it's so simple, and you just sit down, you relax, and you expect your result. The market for expect us to trade for you and make profit. But don't always forget, there is risk of 25%, and you must be ready to actually go with that. If you're not cool with that, fine and good, you should not subscribe for account management. But if you are ready to roll with us, go and actually click on the link and drop your login and password, and we start trading immediately on your account as we see opportunity in the market. Our traders are available, they are willing, and they are ready. So all you just need to do is to just click on the link and message us, and we will respond swiftly to you. Don't also forget, if you want to trade by yourself, we also have VIP channel where we give signals daily to our traders, and they take profit every day. And the subscription fee is just $50. Currently, as now till the end of the month, we are still running a promo for people. Being the time that we just start the VIP, we are giving it out for just $30. So meaning that anybody, any part of the world, you can just quickly subscribe for just $30 for 30 good days. So it is not just a month that we said it start counting on the first day. No, your subscription start counting the following day you subscribe. If you subscribe on the 23, your subscription start counting on the 24, and it will end on the 23. So it's just like that, and you keep enjoying. Even that day you'll be added. That day, if there is signal, you just benefited from that signal free of charge. You are not being charged until the following day where your money start counting from. What are you waiting for? Choose any of those options, and you enjoy it. And also for training, for those who are asking for training, we train. And also right now to the end of the month of September, also we're still offering a very ridiculous price of $50 for training, complete training, if you want to learn how to trade successfully. Now this is one part of the things we're explaining to you. We're going to explain how to draw trend channel, how to actually understand the primary and the secondary trend, and there are a lot of things that are in for the VIPs. So you just sign up to anyone that you are interested in, and let's get you started in any way. Let's make you more profitable. Thank you.